Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorized to provide general financial product advice in Australia and is authorized representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. All right, guys, welcome back to yet another episode of the Young Investors Podcast. Hamish, I'm back. I'm back in Melbourne.
Yes.
Back in the regular setup. How are you going, mate?
I'm doing pretty well. Just working on another video at the moment. I was telling you about this just before we started, but I've got a really interesting story about an investor from the 19th century. So I won't. The video probably won't be out for a little while, so I won't kind of spoil too much about it. But it's been fun going through all of the different archives and business records and all whatever I can find from kind of the 1800s. So. It's been interesting. Something I haven't really done, not the 1800s before. So,
that's a long time ago.
Yeah,
I just think that's like back in. I'm not sure exactly. That's like obviously back in the time of like physical stock certificates, and you can go and rob treasury bonds. I'm thinking about Red Dead Redemption now. Go and rob the train with the treasury bonds. You know how they take the stack? Yeah, they're crazy.
Yeah,
crazy
well,
times.
that's why it's actually quite interesting, because there is a lot of kind of physical kind of relics and business records. Like I've been able to find, these like stock certificates and bonds that this person was buying and owned. And so you get all these kind of like physical just pieces that I can present in the video. So it's been really interesting. How are you doing? I think you're a little sick after you've got the travel curse at the moment.
Yeah, I did get the travel curse. We have such bad luck when it comes to traveling and illness.
Yeah.
Like every time we go and do something, especially work related, anytime we go and do something work related, we just get, smacked down with sickness. But unfortunately, yes, that happened to me. So apologies, my voice is a little bit off. It'll probably crack a lot during this episode, but that's all right. You can have a good laugh at my expense, and hopefully it holds up, because we've got a funny little episode today. It just so happened that all the news stories this week are about fraud stories or fraud developments. So I know people like it when we get around to Hamish's fraud story of the week, but now we've just got fraud stories of the week. We got a whole episode of fraud stories, which is quite funny, and current ones too. We're not even looking back in time. This is stuff that's happened. It's happened over the last week or so, which is crazy. FTX, Adani, and Archegos.
Yeah.
Or Archie, I don't know how to say
Archegos. I think every time I've seen it presented by CNBC or Bloomberg or something, I've heard a different pronunciation. Yeah. So I'm not sure.
That's probably right, isn't it? Yeah, that's funny. Yeah. And then also just to change things up, you're going to talk about the RBA and Australian inflation, right?
Yes. Yep. Exactly. So with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts, so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days. Where do you want to begin?
All right, Hamish. I can begin with a story. We'll start with the most optimistic, the nicest of fraud stories of this week. Yeah. It's actually quite interesting. This is FTX co-founder Gary Wang avoids prison time for his role in crypto fraud.
Wow.
And of course, we heard Sam Bankman-Fried, and I think he got 25 years or something like that. And he what was her name? Caroline Ellison, I think.
Yep.
Was the lady that was taking the funds through Alameda Research and doing dodgy things with them. But yeah, this FTX co-founder has avoided prison. You might be like, how can this be? Well, let me tell you about it. So it says here, Gary Wang, co-founder and ex-technology chief of FTX, was sentenced Wednesday to time served and 3 years of supervised release. On each of the 4 counts he pled guilty to, becoming the 5th and final ex-employee of the collapsed crypto exchange to be punished. Wang was also ordered to forfeit $11 billion, the same as the other co-defendants. Wang, who took the stand in the trial against his former boss, Sam Bankman-Fried, faced a maximum sentence of 50 years for the 4 criminal counts he pleaded guilty to, including conspiracy to commit wire fraud, conspiracy to commit commodities fraud, and conspiracy to commit securities fraud. After FTX's former engineering chief Nishad Singh successfully avoided prison time when he was sentenced by Judge Lewis Kaplan last month, Wang was seeking the same sentence, citing his nearly immediate cooperation with the government. And that's, as I'll talk about in a second, this is kind of what's really got him off the hook,
right,
in this case, is this overwhelming cooperation with the government. So I'll tell you a little bit more. When given the opportunity to address the court, Wang said he was deeply sorry to the customers and investors in FTX. Of course, you would say that, wouldn't you? He says, quote, "I took the easy path, the cowardly path, instead of doing the right thing," Wang said in a short address to the court as he clutched a single printed piece of paper that he never referenced from the podium. I find that little anecdote interesting. Quote, "I will spend the rest of my life trying to make amends," he added. Wang's parents, as well as his wife, who's expecting their first child, were in court to support him. So you're probably saying, okay, this is kind of what all criminals do. They do something bad. They know they're doing something bad. And then after they get found out, all of a sudden they're sorry. But somehow they're not sorry while they're doing it, right?
Yeah.
And it's interesting. Like, I think the reason it sounds like he didn't get the full punishment is because there might have been some lack of clarity around whether he was fully informed that he was committing these crimes, as opposed to Sam Bankman-Fried and Caroline Ellison. I think they knew exactly what they were doing.
Yeah.
But I'm not 100% sure this guy actually knew exactly what he was getting himself into.
Yeah.
And he's also, and the other thing which I'm about to talk about is he is also he was very helpful to the government in the whole case.
Yeah.
So I'll read you the next bit, which says attorneys for Wang said he didn't have full visibility on the crimes, unlike the other cooperating witnesses, and didn't know that FTX's sister hedge fund, Alameda Research, was taking customer money until after the scheme was underway. The government was also seeking leniency for Wang. Assistant U.S. Attorney Nicholas Ruse described Wang as the easiest cooperating witness he has ever worked with. And he credited Wang for essentially deciphering half of the case for the government by meticulously unpacking the complicated code used by FTX that allowed for the customer money to be taken off the exchange.
Wow.
He was very, very helpful to them, it sounds like. In the sentencing submission, prosecutors added that since testifying against the former FTX CEO, Wang has, quote, put his extraordinary computer programming skills to use in detecting potential fraud in the stock and cryptocurrency markets.
Wow.
And has built an interface that the government has started using for detecting potential fraud by publicly traded companies. In addition, quote, Wang has also been working on a tool for detection of potential illegal activity in cryptocurrency markets, which in the event Wang is sentenced to a period of time served, the government understands he will complete as a part of his ongoing cooperation. It's so interesting that, I don't know, it's like you can get caught up in so much stuff, but also like, it seems like cooperating with the government definitely helps a lot.
Yeah, well,
when it comes to sentencing.
Yeah, well, it's just kind of funny how it kind of works with these kind of conspiracies where the government kind of needs to, they need to kind of pick who they're going to go after, and then have people who they're going to support when it comes to sentencing, and say, hey, we'll support you when it comes to sentencing and push for a lower sentence if you help us out. It's kind of just the way that it has to work. They have to like pick their poison so that they can get as much inside information as possible to go after the man at the top. And so,
the big bad.
Yeah, so it is just kind of funny that that's just how it works, even though, potentially they're probably, well, they all are guilty. I mean, he pled guilty. So, it's just the interesting is the way that it goes.
It says here this is a quote from Judge Kaplan. He said, "I've never seen anything quite like what happened here. You're entitled to a lot of credit." So that's, if you heard that coming from the mouth of the judge, you're probably like, "Oh, okay, all right, that sounds better." So yeah, it seems like he's really has gone out on a limb to help them. Obviously, it doesn't take away from the fact that he was a part of these massive crimes that affected a lot of people. But it seems as though he has been very helpful, at least after the fact, in helping uncover all this stuff.
Yeah.
Which in some way is good. It says here, in March, Bankman-Fried was sentenced to 25 years in prison, ordered to pay $11 billion, the harshest punishment from Judge Kaplan. Alameda's ex-CEO Caroline Ellison, who was the star witness in Bankman-Fried's prosecution, and his ex-girlfriend, was sentenced to 2 years in prison for her role in the crime. And Ryan Salame, another former top lieutenant of Bankman-Fried, was sentenced to 7.5 years in prison in May, beyond the upper limit recommended by prosecutors. So There you go.
Interesting. Yeah, I hadn't heard about that last one, Ryan Salame. I actually didn't hear about him. I only heard about the other two. So, wow, that's crazy. 7.5 years. Wow, insane.
Ooh, ouchie.
Insane.
So that's a very interesting kind of wrap up to the last FTX person that was going to be sentenced. So there you go.
Well, from Gary Wang to Bill Hwang. We've got, not only do we have multiple fraud stories, we have rhyming fraud stories.
What a zinger.
Do you remember
the
name? Do you remember the name Bill Hwang? Is that
Yes.
Yes, so
that does ring a bell.
One of the biggest, or maybe even the biggest stock market frauds of 2021 has finally been sentenced this week. So I thought maybe we could have a bit of a refresher on the whole Bill Hwang story.
I think I will need a refresher on this one, to be honest. I can't quite remember this one very clearly.
Yeah, because not only was this story quite a few years ago, but it was fascinating to go through at the time because it's just kind of it's one of those fraud stories that just has some hilarious elements to it. So Bill Hwang was an investment manager, of course, and as we now know, his last investment fund didn't end too well. It didn't go all that great. And the one before that as well that he was running actually in the before 2010 also didn't end too well. But we won't talk about that because we'll be here for hours. But in 2013, all of this kind of started off, or this last leg of the story kind of kicked off when he established a family office fund called Archegos Capital Management, or Archegos Capital Management, which was an investment fund that he set up in New York City. So he's a Korean man, but he was setting up this fund in America, and the reason he was doing that was because he was actually receiving at this time a 4-year trading ban from Hong Kong, which was where his previous fund was being run, and he was getting a 4-year trading ban for insider trading. So gives you a bit of a small foreshadowing into the kind of person that Bill Hwang is, and basically, Bill Hwang's investment strategy was just completely insane. I think there's not really a better way to describe it because we've covered lots of interesting strategies. Sam Bankman-Fried's whole running of the exchange was pretty insane, but this is definitely up there. With one of the craziest strategies. So basically there was kind of 3 elements to his strategy that were all kind of geared towards just maximizing returns to the absolute limit. And so the first is, of course, leverage. So he borrowed an astounding, naturally, he borrowed an astounding amount of money to amplify his investments, which, using leverage, using margin when it comes to the stock market, just in of itself is a risky thing. But when you're using lots and lots and lots of it, and combining it with some other strategies, it can be obviously incredibly risky. Obviously, it can provide incredible upside if it works out, but on the downside, there's obviously quite a considerable opportunity for losses. And so that was kind of the first element. The second was portfolio concentration. So he wasn't kind of running a diversified, safe, balanced portfolio. He was basically focused on betting on a handful of stocks. And towards the end, it was mostly media and tech companies. So he was investing in, I think it was Baidu and JD.com, some of these Chinese tech companies that were doing quite well leading up to 2021. They were kind of doing quite well up to that point. And then also, media companies, Viacom, CBS was one of the critical ones that played a role in the ultimate outcome of this situation. And so those were the first two elements. But the third most important and insane element is the use of a type of derivative, a financial contract called a total return swap. And so I'll explain how this works. It is a little bit complicated, but essentially Bill would go to an investment bank and he would say, I want a total return swap on Viacom CBS stock, let's say. And so what would happen is the bank would buy the stock on his behalf. So the bank would own the stock. It would be on their books. They'd be kind of they'd own it. And Bill would just pay a premium, a monthly fee to the bank. And then whatever the stock did, Bill would be paid or charged. So if the stock went up that month, he would get paid out. He would still obviously be paying his kind of monthly premium for this deal. But if the stock went up, he would get paid. And if the stock went down, he would get charged. He would get a margin call. And essentially, the reason you would do this is it allows you to benefit from the stock going up without needing the capital to buy it, right? So let's say the stock is $100. He might only be paying $1 per month in premiums, but he can control a $100 stock that if it goes up 10%, he makes $10, right? So it's just a very extreme version of leverage, essentially. Of debt.
That's insane, actually.
So it's a pretty it's obviously quite a leverage strategy because it allows you to just kind of invest a very small amount each month in these premiums, but benefit from the stock movements to a much larger degree. The risk, of course, is if the stock goes down, you can be very much exposed to a massive margin call. So this strategy is already insane, right? So he's using debt, he's using a lot of these contracts, he's investing in a concentrated pool of stocks, so he's exposed to whatever happens to those stocks. But none of that is actually illegal. Like we're actually talking about someone who's now been criminally charged and sentenced in New York. So there is a little bit more to the story that is important. And so it's a case of good old-fashioned fraud, securities fraud and wire fraud. Those two tend to go hand in hand together. But essentially, the secret benefit, I guess, to total return swaps was it made it much easier for him to hide what stocks he owned and what exposure that he had, rather than him actually owning those stocks. And it essentially allowed him to lie to banks about what stocks he owned and how many contracts he had with other banks. And so what we kind of found out was he went and basically shopped around at pretty much every investment bank you could think of. It was Goldman Sachs, Credit Suisse, Morgan Stanley. There was a massive list of them. And they're claiming that they didn't know that he was shopping around. They thought that Bill had only made contracts with them. And so that's the fraud part. And essentially,
I see.
these investment banks, he ended up going around and shopping for $50 billion worth of these swaps. And at the time, he was worth, this is a family office, so it's his own money, and he was worth $2 billion, right? So he's taken out contracts for stock worth $50 billion, and he's only worth $2 billion. And so, you know, you can imagine if those stocks drop by 10%, that's a $5 billion hit, and he's worth $2 billion. So it would only take a very small hit to the portfolio in order for him to be completely wiped out. And and so
crazy. So he's making just this enormous bet that he shouldn't make and can't really service if things go wrong.
Correct. Yes, exactly. And so those were the main charges. There was also market manipulation. So he was charged with using his kind of leveraged position to force up the stock prices of very low trading volume stocks. And so that was also kind of an element. But the main charges were the fraud and taking on way too much risk through these swaps.
Yeah, I see. Interesting.
And so
what's happened?
Yeah, and so he made kind of huge returns in 2020 using this strategy. I think he made, I think his net worth went from, I think it was $2 billion to about $30 billion. And so he did very well. But then it kind of all fell apart in 2021. So it's kind of funny how small of a thing that had to happen for him to lose everything. But basically, Viacom CBS, which we mentioned earlier, basically just unexpectedly announced a capital raise. They're going to raise equity. They're going to sell a bunch of shares. And that was enough to get a margin call that was so big that it just destroyed the fund. Which is just hilarious.
Complete and utter obliteration.
Yeah, and you know, to be fair, leading up to this, the whole media sector was kind of slowly coming down, and then I think the Chinese tech companies were also coming off. So there was some other factors, but I do find it quite ironic that it was one press release was all it took to basically obliterate $30 billion worth of net worth. I think Wall Street Journal reported that he lost $8 billion in 10 days was like the worst of it. And so that's quite the loss. And they also reported that the banks that were lending money lost a total of $100 billion in market value. And so
yeah, that's right, because they were stuck with all these. They were stuck with the shares.
Exactly, right. So the banks were the ones that were actually holding the shares. Credit Suisse, I think, fared worst. They took a $5 billion hit from this particular case. And it also happened at a time where they were facing a number of other problems, and it actually ended in them going bankrupt. They defaulted, and they were acquired by UBS, which we also, I think, spoke about at some point. So he contributed to basically the loss of one of the longest standing investment banks ever, which I thought was quite funny. So yeah, he was charged with 11 counts of fraud and market manipulation. He was found guilty of 10 of them. And then the news this week, of course, is that he was sentenced in New York, and he is, he's going to be serving 18 years in prison. Which is a pretty big sentence. I think you just mentioned that SBF got 25, and so 25, not as much as him, but yeah, nonetheless, that's a massive sentence for a white collar crime.
What'd you say? 18?
18, yep.
So he's 60, so he's getting out on his 78th birthday. Happy 78th birthday.
True.
Yeah, wild.
Yeah,
that's crazy. The thing I find funny is like he was charged with 11 counts of fraud and market manipulation. He was found guilty of 10.
Yeah,
I can just imagine him like being like, yeah, okay, I did that one. Okay, and I did that one too. And that one. And that, okay, I did that one too, and I did that one, but I didn't do that one. I did not do that one. Just that one case. They're like, oh yeah, no, I guess he didn't do that. He did the 10, but not the 11.
Yeah, it is kind of funny because, you know, you can obviously put the whole situation into one bubble, but it would be interesting to see if we had kind of a pure insight into the situation, how many actual instances of fraud were there? Because obviously every time he lied, every time there was an email, every time anything like that where he lied in order to get capital is technically, a count of fraud. And so they obviously the prosecution just tries to see what do we have evidence of, and what can we make stick. And sometimes it's a lot. But it would be funny to see how many times he really did lie.
Yeah, and that's the interesting thing, and this is a beautiful segue because that idea of the lying being the committing the act of fraud as well is exactly what's happened in this next fraud case, which is related to another name that you might remember because we've spoken about him before, Gautam Adani. Australians will be they'll remember Gautam Adani quite well as the guy that, I don't know if he actually did, but was trying very hard to open a very big coal mine in Queensland that got Australians up in arms about. Do you remember that? That was years
I don't remember if he ended up doing it, but I do remember all the Stop Adani stuff that was...
Stop Adani?
Yeah.
Yeah, that was everywhere. But yeah, Gautam Adani, he is the second richest person in Asia with a reported net worth of 85 billion. And I didn't even tell you at the start of the story. He's charged in New York with massive fraud from a bribery scheme. So that's what we're going to be talking about. And you also might remember him because he lost tens of billions of dollars in personal wealth in early 2023 because that was when the short-selling firm Hindenburg Research published a report accusing the Adani Group of engaging in, quote, in a brazen stock manipulation and accounting fraud scheme over the course of decades. And yeah, Hindenburg's report called it, quote, the largest con in corporate history, end quote. To which Adani issued a 413-page response to Hindenburg, calling the allegations baseless. Maybe not so baseless.
Maybe they're onto something there.
Maybe there's some weight to the allegations. So yes, what has happened? Well, Gautam Adani, chair of India's Adani Group and one of the world's richest people, was indicted with others in New York federal court on charges related to a massive bribery and fraud scheme, authorities said on Wednesday. Adani and other defendants are accused in the indictment of having paid Indian government officials more than $250 million in bribes to obtain solar energy supply contracts worth more than $2 billion in profit.
Whoa.
So that's quite a biggie, isn't it?
Well,
that's just quite a biggie.
It's a pretty good deal for them. 250 million for $2 billion.
Yeah. It's a very, very good deal. The 62-year-old billionaire and two executives in Adani Green Energy Limited, his nephew Sagar Adani and Vineet Jain, are charged with misleading US and international investors about their company's compliance with anti-bribery and anti-corruption practices as they raised more than $3 billion in capital to fund those energy contracts. Right. Both Adani's and Jain were charged with securities fraud conspiracy, wire fraud conspiracy, and securities fraud. Although the alleged criminal activity at the center of the indictment occurred in India, the defendants are charged in Brooklyn Federal Court because of alleged actions that occurred in the Eastern District of New York in connection with the bribery scheme and capital raise effort. Right. So that's why it's kind of touched the US, or it's been taken up by the US. Those actions included alleged false statements of material facts or omissions from statements related to a bond issuance that raised capital for the solar energy contracts. So they lied. As we were talking about before.
Yeah.
Breon Peace, U.S. attorney for the Eastern District of New York, said the defendants, quote, orchestrated an elaborate scheme, end quote, to bribe India's officials to secure contracts and lied about the scheme while raising funds. Lisa Miller, Deputy Assistant Attorney General, said, quote, the indictment alleges schemes to pay over $250 million in bribes to Indian government officials, to lie to investors and banks, to raise billions of dollars, and to obstruct justice. These offences were allegedly committed by senior executives and directors to obtain and finance massive state energy supply contracts through corruption and fraud at the expense of US investors. So they're trying to get their solar contracts, Hamish, but Unfortunately, not this time. Sorry, guys.
It's not the way to do it.
Not the way to do it. Correct. Hamish, that is... gosh, you're smart.
Thanks.
You pick up... you're very attentive.
Very valuable insight.
Yeah. Don't do it like that. Just go and do it the normal way. There's nothing wrong with doing it the normal way. It'd be interesting to see, like when all's said and done, did they even need to bribe? Like, did they even need to do it? Could they not have just like submitted a like tender offer and to see if they got it them? So, like, they probably would have. They're a massive energy company in India, right?
Yeah.
They probably could have gotten it just by playing their cards right. Maybe
I guess
not.
they
Maybe
just
that's obviously
guess they
why
just thought they'd
felt
get away
the
with
need
it
to do it.
Yeah.
Yeah, exactly. But there you go. SEC filed civil complaints Wednesday against Gautam Adani and Sagar Adani, as well as against Cabanez, who is an executive at Azure Power Global in connection with the alleged bribery that enabled Adani Green Energy and Azure to capitalize on solar energy contracts. Quote, Gautam and Sagar Adani orchestrated a bribery scheme that involved paying or promising to pay the equivalent of hundreds of millions of dollars in bribes to Indian government officials to secure their commitment to purchase energy at above market rates that would benefit Adani Green and Azure Power. Okay, that makes sense. And Cabanez allegedly facilitated the authorization of bribes in furtherance of the scheme while in the United States and abroad. So there you go. Naughty.
Naughty.
And in other news,
in conclusion,
Adani has come out and said these allegations are baseless.
How many pages?
Nah, not
How
really.
many pages is this report?
Yeah, 400 pages saying that this is baseless.
Well, there you go.
I don't think so, mate.
Well, I guess the loss in value after the Hindenburg report was released was justified then. Seems like it was justified.
I think so, yeah. But anyway, sorry, my voice is starting to go. But that is all I have to talk about for Gautam Adani. We shall see what comes of it.
Yeah, I thought we could just finish with that's all the fraud we've got for today. But I've just got a short kind of update around I guess economics in Australia and specifically from the Reserve Bank of Australia with the November minutes that was released from their November meeting. We get a bit of every time the minutes is released, we get a bit of a deeper insight into what the committee is kind of thinking about. And maybe what we can expect going forward, because 2024 has been for a lot of people, I guess, maybe disappointing if you have a mortgage, because there's been, at least in the media, this constant idea that there was going to be rate cuts, and there hasn't been any so far, and so. Yeah, that's obviously, I think, been the story of the Australian interest rate story has been a little bit more delayed than the US, which has already gone through their cuts. But the minutes was released from that November meeting this week, and part of it said, given the already lengthy period in which inflation has been above the 2 to 3% target range, the board will have minimal tolerance to accommodate a more prolonged period of high inflation. Even if this occurs because of factors that constrained the economy's supply capacity. And so that's an interesting insight, because it essentially indicates that they're concerned about the fact that inflation has still been outside of the range for such a long period of time that they're not going to allow that again. Like, they're not going to allow another year to go by or 2 years to go by where inflation is well above the range. And that's obviously an indication that the rate cuts may be being kind of pushed a little bit further back again.
Yep.
Yeah, so of course, at that November meeting, the RBA did not raise interest rates. They kept them at 4.35%. Economists now believe that the RBA will begin cutting in the first half of 2025, first half of next year. But always keep what economists say with a pinch of salt, because they, up until recently, believed that the RBA would be cutting this year. And so economists, as they do, kind of just tend to constantly update what their projections are. The market is actually a lot less optimistic. So we can look at bond rates into the kind of the next year and see what do investors expect for rates. And investors are now saying that they expect rate cuts to start in August of 2025. So that's obviously quite far into the year.
Quite a way away.
And the other interesting thing from the minutes was that the RBA thinks inflation won't be within the target range, the 2 to 3% target range, until 2026. So not next year, the year after. So
really?
They said, quote, members observed that underlying inflation remained too high and that staff forecasts did not see inflation returning to target until 2026, which is obviously a very far way from when all of this began. Inflation started kicking off in 2022, I think. And so
about then, 21, 22.
Yeah, and so you're talking about quite a number of years of inflation being outside the range, and that begins to compound, and that has an impact. So it's not surprising that it's still the main focus, I think, of the RBA, even though it is tough that rates are being held at this higher level and they've gone up so quickly from kind of zero where they've been, kind of rock bottom. It is really important that they stop this kind of compounding of prices and don't let that run on for too many years.
Yeah, I don't even know what to say about this stuff anymore because I just got back from Turkey. So this just looks, I'm just like, this is beautiful. This is amazing. Yeah. 2.8% inflation, rates at 4.35%. I said this last week, but in Turkey at the moment, I was literally there last week, as you guys heard on the podcast. Inflation's at 50% and interest rates are at 50%. Like that's brutal. Actually, in Turkey, twice a year, the minimum wages, I guess is the equivalent, get hiked 2 times a year just to make sure that everybody keeps up with inflation. Like the government comes through and just hikes everybody's pay.
Right. Yeah, that's
just to make sure, because otherwise, like people can't afford anything. Like they can't survive.
Crazy.
I think I was talking to Matt Peterson, and what were they saying? Like the average wage for a teacher is like $200-300 USD a month or something like that.
Whoa.
A month.
Yeah, geez.
Yeah. Because inflation's just like gone crazy.
Yeah, that's insane.
And actually, this was very interesting. I went into a store and I was just doing some clothes shopping, and I left my iPhone because I was in the changing room. I was coming in and out of the changing room, right? Because, you try some stuff on. Oh, that one fit, that one didn't. I'll go get a different size. But, I leave my shoes in the change room. I leave my phone and my bag in the change room just as I duck out and get the next one. And I was just doing some shopping, and the security guard just runs upstairs. I was on the second floor, and he runs up and he's like trying to find me. And he grabs my phone and he comes over to me and he says, "Is this yours? Is this yours? Is this yours?" And I'm like, "Yeah." Like, what's the big deal? And he's like, "Do not leave that in the change rooms," because I didn't realize that even though this phone is like a few years old, this for a lot of people represents like 6 months' salary.
True. Yeah. Wow. Yeah.
Yeah.
Yeah. Try it when you think when you say it like that. Yeah.
Yeah. So they was like, dude, if you leave your phone, it's gonna get stolen. Because I mean, I'm not like, oh, the Turkish people, oh, they're so mean. I think about it from their perspective. Like, if you just saw 6 months' salary right in front of your face, you probably would be incentivized to grab it.
True.
Especially if it's off some rich white tourist that what you would assume a rich white tourist from some, I don't know, probably America, even though I'm from Australia. But yeah, that's probably what you'd assume. So. Yeah, pretty wild.
Yeah, that's crazy. What was the which business did you visit that was the most interesting out of the tour?
Well, we visited 8 in total. Some of them. So I was there for the Talus Fund. Some of them are investments that Talus has made, and others we were just touring because these businesses hold particular insight. For example, İşbank, which is the largest commercial bank in Turkey, we weren't visiting because it was in their portfolio. We were visiting because they have insight on the macro of Turkey. Like, when do they expect interest rate cuts? What do they expect inflation is going to keep doing? Blah, blah, blah, blah, blah. So that was really interesting to talk to them from the macroeconomic point of view, but not from an investment point of view. But from, honestly, so we also saw one of the biggest glass makers in Europe. That was quite interesting. One of the biggest the 7th largest oil refiner, Tüpraş. We went to talk to those guys. We also went to BİM, which is like an Aldi, a supermarket chain in Turkey. Mm-hmm. I'm forgetting. We went to, I think most of Turkey's market cap is owned by 20 families. Like, it's very much a rich family kind of vibe. So we went to see one of those businesses, which is called Sabancı. And we also saw Coca-Cola for that region, but they also supply like Bangladesh, Pakistan, Iraq, or all the kind of surrounding regions. I probably would say that Coca-Cola was the most interesting from an investment perspective to me, because it's a simple business. It's one that's closer to home that I can understand. It is the same. It's just Coca-Cola. It's the same business, but it's not for the American region or the Australian region. It's for this region. Yeah. So they get shipped the Coca-Cola syrup, and then they bottle it and then distribute it through their own channels. But I found that one was really, really interesting because in some of these emerging markets, Coke really has no footing, which is wild because we've seen what's happened in the States. Like, Coke's the number one drink everywhere. But in some of these emerging markets, Coke really doesn't have much of a footing at all. Now, a lot of that is to do that some of these emerging markets are so poor that Coke is a luxury that a lot of people just can't afford. But it's also, in some instances, the fact that it's just got low exposure compared to more traditional drinks, cultural drinks like teas, coffees, milk drinks, all sorts of stuff, in various iced teas and whatnot. That Coca-Cola is just not something that many people drink. So they're talking about like addressable markets and how many people drink these, carbonated single like can beverages. And it seems like there's a lot of room for growth. Whereas I'd say maybe Coca-Cola in other areas is much more saturated. In a place like Turkey or Iraq or, Bangladesh or Pakistan, Uzbekistan, or I think it was, I can't quite remember. I'd say, there's not much saturation at all, which I found really interesting.
Yeah, I was trying to, I'm trying to remember, I did look at some of the stats around saturation a while ago with Coca-Cola. And I think even by the late 80s, which was when Buffett was investing in Coca-Cola, I think even by then, the US was already consuming, it was kind of like 1 8-ounce serving per person for the population per day. Which is obviously insane. That like the average was like one person, every person was drinking Coke every day. That was like the average.
That's crazy,
which,
isn't it?
was insane. And Australia was up there as well. It was pretty close. Australia was one of the first markets to have really high Coca-Cola consumption as well. And so I'm pretty sure that was like late 80s. So I think it's even gone beyond that today. And so you're right. In some of these markets, it's obviously quite saturated, but I guess they're building out their kind of bottling distribution in areas where there will be development over time. It's just that's just kind of the next few decades as those countries' economies grow.
It was pretty interesting. One thing I took note of, we were asking them questions about their distribution, and I think they only do 20% of their own distribution. And of that, like, they only organize 20%. The rest is like mum and pop stores that want to sell Coca-Cola, and then Coke just gives them the cooler, and then they just handle everything. But even, I think they were saying, even from the 20% of the distribution that they do, they own 0 trucks. They own no lorries, and that's because they've got such a brand that they've now engineered it so that all the people that they work with, they get their trucks to come and pick up the Coke.
Wow.
Because like the supermarkets and stuff will send their trucks to go and get the Coke to bring it back. So they're like, yeah, come get it if you want it. And because they got such a strong brand and such a strong product, everyone will come and grab it off them.
Wow. There you go.
How good's that?
Yeah, that's quite a brand position. Yeah, Coca-Cola, you know, they obviously do a lot of marketing and you know, the product has been, you know, very consistent for a long time, but a lot of what they do on the distribution side is why and working with the business to business stuff is there's a lot there as to why they're so successful. Like you just kind of touched on it, you know, giving like convenience stores the coolers. So like they'll supply the coolers and they'll just have some rules about which shelves that Coca-Cola has to be on and has to be dedicated to Coca-Cola, and you know, making these deals with McDonald's where pretty much forever they've been would you like Coke with that? It's the default. And so it's all these like little kind of B2B deals that they've arranged that actually play a big role in why Coca-Cola is just everywhere. So it is quite fascinating.
Yeah. But sorry, I've taken us on a massive detour. But no, overall, that's probably the one that I enjoyed the most. Enjoyed touring the most. Yeah.
Awesome.
It was good fun. It was good fun. We also went to, that's the other one. What's it called? Ortolan, I think. I can't remember. Turkey. Ford Ottazan, not Ortolan. Ortolan's the flippin' bird, isn't it?
I don't know.
I can't. Ortolan. Yeah, the ortolan is a bird. I think that's the one that people eat with the towels over their heads because it's so gross.
Oh.
Ford Ottazan, which is the manufacturing company that has the Ford contract. So they make a lot of Ford trucks and the Ford Puma and stuff for the Europe market. Yeah, so that was kind of cool as well to see some cool Fords in their lobby. But yeah. All right, Hamish, let's get out of here, man. Well, I'm starting to waffle. That's always a good sign to end the podcast when I start to waffle. All right, well, thanks for joining me as always, dude. Good to talk to you. Hopefully I'm sounding a little bit better next week, but thanks for persisting, guys. Much appreciated. And with that said, we'll leave you to your weekends, everybody. Thanks for listening, and we'll talk to you next week.
See you guys.
Mm-hmm.